All right, so this just kind of goes into that adjusted gross income definition again. One thing that I didn't really mention, all of these deductions here are called above the line deductions. All the deductions that happen after are called below the line. Adjusted gross income is the line. It's just terminology that is oftentimes used, that's frequently used by accountants, and it's kind of a quick reference. If something's an above the line deduction, you know that it's something that's going to affect adjusted gross income. And if it's a below the line deduction, you know it's something that's not going to affect adjusted gross income. But just kind of to give you a little introduction to that terminology, adjusted gross income is the line. The old tax form before 2017, adjusted gross income was actually the last number on the first page of the Form 1040. They have since moved it up. I think it's line 11 or something like that. And the last number is actually taxable income before we go over to page 2 where we do our tax calculations and subtract any credits and that sort of thing. But this adjusted gross income, it used to be really easy to pick it out on the tax form, on the Form 1040, because it was the very last number. So essentially that line was like the last part of the first page of the Form 1040. Just kind of, it kind of helped you to delineate the difference between the different types of deductions mentally, but that's where that terminology comes from. So that AGI is the line. This is what page 2, or part 2, I should say, of the Schedule 1 looks like. So the items that we're going to be discussing here: educator expenses, so line 11, health savings account deduction, line 13, line 14, moving expenses, line 15, deductible part of self-employment tax, line 17, self-employed health insurance deduction, line 18, penalty on early withdrawal, and line 19, alimony, and line 21, student loan interest deduction. Now, a couple of things that we're not going to be discussing in this class, but are frequently deducted, they're frequently used adjustments, are things like self-employed SEP, simple and qualified plans. I'll explain what those are in just a minute. And where is it? IRA deduction. Those are all retirement plans. IRA deduction is for individuals who, if their income is below a certain level, or they are not covered by a retirement plan at work, they're allowed to make a separate deduction or separate contribution into an individual retirement account. That's what IRA stands for, individual retirement account. It's something that they own. You know, they manage it. They decide what investments are going to go into it. But if they meet certain qualifications, they can get a deduction for that. There are different types of IRAs, though. There are what are called Roth IRAs, which are not deductible, but they have other certain benefits to them. But that's what that IRA deduction is. Self-employed SEP, simple and qualified plans, those are also retirement plans, but those are for individuals who are self-employed. They have their own businesses. These are just different types of retirement plans, but there is a deduction for contributions to those types of plans. We don't go into those in this chapter, but I just wanted to kind of alert you to those because they are common. Those are commonly used adjustments on tax returns. But those are the areas that we're going to be focusing on. So line 21 and above, with a couple of exceptions, there is what we're going to be looking at. These are other types of very specific adjustments. So remember how I said that jury duty pay was considered to be income, and then they've got jury duty pay over here. Well, this is where you would enter if you had to pay that jury duty back, that money back to your employer. So it would be in and out. In on the page 1 and then out on the page 2, so it really wouldn't affect anything. Some of the non-taxable amount of the value of Olympic and Paralympic medals and U.S. Olympic Committee prize money. So if there's, those are taxable. If you win a medal at the Olympics, they're taxable, but apparently there can be some non-taxable portions. So you put the gross amount on one area, and then you would subtract out the. I don't even think they're not even real gold anymore. They're like very little. There's very little precious metal actually in those things. I don't know what the value would be. Anyway, and then of course a spot for other adjustments. So something that doesn't fit but is part of the tax code that you could arrive at. So these above the line deductions, these adjustments, are also called, how do they phrase it here?
It's about 4.
Yeah, we got for and from. So these are for AGI, and everything down here is from AGI. Again, it's just terminology. For meaning, and I always think of this as, B for AGI. Obviously it didn't work very well because I forgot what the terminology was there for a second. But before AGI, so everything that comes before that, and then everything that comes after that. So it sort of emphasizes the importance of adjusted gross income, the fact that we've got all these different terminologies for the deductions that come both before and after AGI. Questions?